Budget 2010 has put the onus on infrastructure financing on India Infrastructure Finance Company Limited, IIFCL, a company which was set up in January 2006 exclusively for this purpose. Pranab Mukherjee, India's finance minister, had said in his budget speech, IIFCL would take care of 60% of Indian commercial banks' infrastructure financing in fiscal 2010. Besides, IIFCL will also get into takeout financing. I have with me Mr. Rs. Kohli, Chairman of IIFCL, to tell us what IIFCL can deliver. Mr. Pranab Mukherjee spoke about takeout financing. Historically, takeout financing has never taken off in India. If I remember correctly, State Bank of India has tried this with IDFC, another infrastructure financing company. What's going to happen? Are you sure that IIFCL will be able to get into this takeout financing?
Actually, the problem with the banks is that they have got short-term resources and infrastructure needs long-term funding. So there is a question of asset liability mismatch. So takeout financing is one of the source of funding infrastructure projects.
Right.
Thereby, banks may be comfortable with regard to asset liability mismatch, and some banks may have a higher group exposure than as per the regulated measures. So they can get out of that account so as to keep the exposure within the regulated limits.
Right.
The earlier scheme, of course, I agree with you, was not successful. So that's why I think the finance minister has announced that the scheme may be evolved in consultation with banks.
But what are the problem areas? Like, why didn't it take off in the past?
Problem is that as per the circular of RBI, you have to provide capital adequacies. If it is unconditional takeout, then the norms are different. If it is a conditional takeout, the norms are different. So I think that could be one of the reason why it has not been successful.
Okay. Tell me, 60% of entire Indian banking system's exposure to infrastructure, now it's your responsibility financing. Where would the money come from?
Actually, under the first stimulus package, we were asked to raise 10,000 crores by way of tax-free bonds by March 2009. That money has been raised and is lying with us. So that money could be used for giving refinance to the banks for up to 60% of their commitment.
And at what price this refinancing will take place?
Actually, under the first tranche, we have raised the funds at 6.85%.
Right.
So we will give refinance to the banks at 7.85%.
Your plan to raise 1.2 billion from World Bank has got stuck for some issues. Could you tell us where are you on that?
Actually, World Bank, I think there is some issue that is under discussion. ADB has already sanctioned a loan of $500 million. Out of it, 200 we have availed, and 300 would be availed in the next 3 to 4 months. They are again going to their board to sanction another $700 million in September. So that funds would also be available this year. Part of those funds will be available. KfW has also sanctioned have given a principal sanction of 184 million euros.
IDFC was set up sometime in late 90s, right? With the sole, Mr. Chidambaram did that, I think it was his initiative, with the sole purpose of financing infrastructure projects in India. Now with the past few years, we have been seeing that the focus is on IIFCL. So what does that mean?
IDFC is also doing a good job as far as infrastructure funding is concerned, but they are lending to private sector. Whereas IIFCL has been created to lend to the public sector. Public-private partnership is an overriding priority, and only 20% of the sanction could be given to the private sector.
By IIFCL?
By IIFCL. Okay. So our emphasis is basically on a public-private partnership. And even as per the World Bank report also, that in the last 3 years, we had more projects in public-private partnership what we used to have in the last 10 years. In terms of amount, and I think this is going to be a successful model like UK.